Hello, everybody. This is Bill Lanier with the Bill Lanier team at Keller Williams Realty, where we pride ourselves on providing a professional real estate service that begins with integrity, 30 plus years of experience here in the Midland real estate market, and a knowledge that begins with lots of data and research. And with that thought in mind, every day I have questions about how our market's doing, and more in particular, how interest rates have affected our market. So I wanted to do a short series on what I'm seeing out in the market. I hope you enjoy it, and please call me if you have any questions. I'm going to start out with a slide presentation, beginning with interest rates since 1975, just where our rates have been each year since 1975. You'll see in the middle here, average interest rates, 7.75% over that time frame. Back in the 80s, last time we had inflationary fears, high interest rates. Where we are today, we have seen a spike in interest rates. Seems alarming right now, but compared to our average since 1975, our interest rates are still very healthy as far as where they are. Just a big hike from 2021 when we had less than 3% interest rates. So it has created a little bit of concern with buyers. I'm going to jump forward a little bit and bring it into a smaller segment. What's happened with interest rates since 2020 through current, and more in particular, how it's affected our market. When interest rates started jumping up with the Fed in March of 2022 last year through the end of the year. And you can see we did have a sharp increase up through November. What'd that do with demand? The way I measure demand is homes under contract. You'll see lots of lines here, but it's just on a monthly basis, how many homes are under contract each month, starting with 2019 through this year. The one I want to draw you to is 2022. Our demand in Midland was in record territory for the first quarter of last year. And as the Fed started raising interest rates, we could see a demand decrease. And especially that last half of last year, you can see where our demand was the slowest we've seen in recent history. So it did affect our market to some degree. The important thing I want to show is with our interest rates tailing back a little bit, everybody has decided that 6.5% interest rates aren't near as bad as that 7.4% that we saw in the previous chart. So good signs of our real estate market having good legs underneath it. But more importantly, everybody panicked about this. This time frame gave buyers an opportunity. We had slower demand. Sellers had to be a little bit more aggressive in concessions trying to get buyers into their house. Sound looked terrible, but I want to go one more chart and I'm going to shut this down. You can see where this is total number of homes sold each year. And 2021 was our record number of homes sold with 2,747 homes sold that year. Look at this past year, even with that slow demand, it's our second best year ever. So if you hear realtors complaining out there, they're complaining about the second best year that they've ever had. All that to say, I hope you enjoy this information. Please give us a call if you have any questions. If you need to sell a home, any real estate needs, we want to be your go-to person. Thanks for your time. Next time we'll be talking about average sales price and how the market has fared the last few years. Thanks.